All right, GM, and we're back live again. We are with George Harrap, one of the oldest founders on Solana, who has been here since the birth of the ecosystem. George, you've been to a few breakpoints. How does this one compare?
I think it's bigger. We've got more booths everywhere. We've got 2 floors of these things now. So yeah, look, I think has it grown over the years? Absolutely. We were 3 years in Lisbon. I was just saying before, like they have debates on right now at the stage. I want it to be more contentious. I want people, jumping off the podium saying this is my point and this is why it's valid. So yeah, I just want to, stir the pot a little bit. But other than that, yeah, it's great. It's definitely bigger. Maybe you've got more of these institutional bros here now that wasn't a thing in the past. Mm-hmm. And just walking around, like trying to find people that you know in the ecosystem is actually harder just because there's just a ton more people. Mm. So you're like going through the hordes of everyone.
Too many suits.
Yeah, well, yeah. Yes, I would agree with that. Sure. Yeah.
Is that not kind of the promised land that we've been told for so long? The narrative of previous cycles has been the institutions are coming. Now they're here. And like, where does that leave us? What's the next step along, true crypto growth?
Well, it's a lot of trust me, bro, with these institutions, right? It's, some of them, whether, it's prop AMMs that are quoting off chain or whether it's people tokenizing stuff going on a stock exchange somewhere. I mean, look, it's good. It's a development. It's an addition to the existing community. I think if the community only existed of that, it would be bad. And it wouldn't really go anywhere if that was the case, because if you just have a bunch of centralized things talking to each other across Solana, well, it might as well just be a centralized network that they're talking about. Mm-hmm. So I think DeFi is still very important. It's the underpinning of everything that we're doing here. But so yeah, it's more of an addition to than anything else, I'd say.
Mm. Yeah. Big part of DeFi, that is one of the biggest narratives of 2025, is tokenized stocks. Mm. I want to talk to you a bit about Remora. What is the promise of Remora for someone who is excluded from investing in traditional stocks?
So tokenized stocks, super interesting. That is a figment of this year, basically. They've just come into existence pretty much. But it makes it much easier to access a lot of these assets, right? Like before, okay, what are you going to do to try and buy some stocks? You're going to talk to a broker, you're going to have to convince them that you are who you say you are and all this other kind of stuff, and bank transfers into and out of the ecosystem. Or you can just open your wallet and press the swap button. So it's fundamentally easier to access, number one, with all these things on chain. And yes, there's more things that are maybe coming, whether it's dividend paying stocks or other different niche things that maybe bonds and stuff. There's been treasuries on chain for a while now. So yeah, I think what we're trying to do with Remora, we're focusing more on the stock side, and a very exciting space to be in. I think TBL is just going to continue to grow. It's going to be one of those verticals of crypto that's just going to just hammer away and just get higher and higher, regardless of bull markets or bear markets. That's another thing, is like in a bull market, right, which we've had previously in Solana, everyone's buying like with meme coins, right? People go, oh, Solana's meme coin. Number one, it's not. Number two, when it was, a big thing, that was like most of the ecosystem, and whether it was a bull market or a bear market relied on if people were buying the memes. But now with stocks, you can be in a bear market and people are still going to buy the S&P 500 because it's not going to nuke 90% overnight and then you're going to get wrecked and everyone dies. Like it's actually fine. So I think regardless of the market type in crypto, yeah, you're going to see stocks continue to grow, which is actually really good. We've never had that in crypto. It's always been betting on, what crypto is the number one or the flavor of the month or something like that. So I think, now, does that mean maturity's coming? Maybe. Probably a good thing.
It's at least the start of it, right? And I think that people on Solana have been looking for tokens to hold for a long time.
True.
And they haven't found it.
Right.
Like no matter what token it is, whether it's a wrapped Bitcoin that, becomes unwrapped at some point because FTX comes or whatever the case, like, we flocked to NFTs for a while because they were a better store of value than any other tokens were. Yeah. Right. Like that's like how far they went looking for it. So to bring stocks on chain, like long-term holders that they can hold those tokens. Also, I'm really excited about it. It's like the promise of crypto. Like it's outside of crypto, obviously, but to bring those in, I think is it's huge.
Also, it's a thing you don't really need to sell, right? Like previously in crypto, it's like, hey, look at my coin. It's the most interesting thing ever because of like insert whatever is the flavor of the month.
Yeah.
Whereas if if the coin is something that's correlated to the S&P 500, I mean, everyone knows what that is.
Yeah.
So the effort in trying to get something off the ground perhaps is less.
Yeah.
People understand the product a lot easier. You're not using buzzwords, which in crypto, people love making up buzzwords for everything. You make up a word every day of the week.
Yeah.
But so you don't need that. So yeah, I think it is a simple but easy to understand product that kind of just makes sense for crypto because it just makes it much easier to get involved. Like I said, open a wallet, press the swap button, done, and you can have some stock tokens in your wallet. Way easier than doing anything else.
It's a better form of what traditional finance has been doing.
Right.
And they're getting close. Like Robinhood is pretty good now.
Right.
Like they've seen their success because they got rid of a lot of that friction. Crypto just blows that out of the water.
Yeah.
Right.
Yeah, it's like that. Okay, people say that's the competition. Yes. Okay. So the competition is a centralized app that basically only people in America use, right?
Yeah.
Okay. So now you have these stocks available to everyone in crypto. I think that's just fundamentally an easier, better thing.
Yeah.
It's like anyone anywhere in the world can have a Soulflare wallet or something like that, and they can be swapping these things. So yeah, as an access pathway, it is nowhere near this supposed competitor, and I think you're just going to see that growing over time. Yes, Robinhood has millions of users and that sort of thing, but so does crypto.
Oh yeah.
So I think as soon as people catch on that crypto is really the venue to get access to some of these things, I mean, as I say, TVL growth is just going to continue for like years to come.
Yeah. What are the biggest growth unlocks for that TVL? Is it just an organic thing that as more assets come on chain, people can diversify themselves within their wallet? Are there certain DeFi integrations that can push that further? What's the growth vertical on tokenized stocks for there?
I think it is like DeFi is a really big component of it because that is the value add, right? So at Remora, what we focus on is we're going to be the people that understand the DeFi element. That is really our unique value add, is that we've been building on Solana since literally the very beginning. We were like the third project on Solana. We through Step, we've integrated with every single project, blah, 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 all that kind of stuff. So we understand the DeFi world. We're very embedded with that. And I think that's what's going to give things value. Now, people say, why? Well, it's because why would you hold, say, a Tesla stock that, say, doesn't have a yield, or you could have a Tesla coin, and maybe it's in an AMM pool and it's earning a 20% APY. Like, fundamentally, that's a better product, right? Yeah. So I think that's what's going to be interesting to people. And as soon as, that becomes more obvious, maybe exposing it through different products or whatever, and also lenders, right? Like, we've been talking with lenders. We had Luke Scale on just before. Being able to borrow against these tokens, these RWAs, is also a big unlock because you can still, hold these tokens in your wallet and then you can borrow USDC against it. You can do some other stuff and blah, 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 to participate in yield farming or whatever you want to do. And it's that is fundamentally an easier, better system than if I were to try and do that at a normal broker. Yeah. Now, does my normal broker allow me to borrow USDC and that sort of thing? You could maybe do that. But at some brokers, you need like minimum thresholds of the amount of money in your account. You need to be sometimes accredited to investors in different ways. Whereas in crypto, the DeFi world, I think, is much more open. And if you are an issuer, it makes sense to be involved in this ecosystem because you get the thing which you're issuing, out into the ecosystem more people. If you're a token holder, it makes more sense because you can do more with the coins which you hold. So it makes sense for a lot of different people. So, and especially if you're a lender. If you're a lender, you want to accrue TVL, and you also want TVL which is not going to disappear tomorrow, right? Like you want S&P, like I said, S&P 500, it's not going to nuke 90%. No. So if you're borrowing against that, I mean, that TVL is probably going to stick with you a bit longer than like, Bing Bong coin 69. Yeah. And that's what lending has been for a very long time.
Yeah. You talk a bit about the promise of DeFi. One of the big conversations over the last few weeks, obviously, has been the topic of rehypothecation, open sourcing. I believe that Solana DeFi doesn't really have much of an open source culture. I think that's something that we probably need to work on to kind of catch up. Yeah. What does open finance mean to you?
What does open finance? I mean, it's a word that people throw around, and then some people will say it means open source. I don't know if it, like, open source means open source.
Yeah.
Open finance is kind of a catch-all word that can mean open source, but it could mean like transparency. So it could be like being able to prove, like if you're doing off-chain stuff, can you provably show what you're doing off-chain, right? Or can you, provide transparency into reserves or something like that? So I think if platform providers can do that, then maybe they would satisfy the definition of open finance. Some people have been calling for everything to be open source. It'd be great, but I can see why, especially when you're dealing with the old world, the TradFi world. Like the TradFi world doesn't do that, right? So there's a fundamental stumbling block when you're an asset issuer trying to deal with that world. You can try and bring some of that, and absolutely, I think people should. But don't be surprised if there are perhaps limitations, not allowing you to do that.
Yeah.
Interesting. I know. I have a question I want to run by.
Yes.
So, okay, so I see a lot of different growth in stocks on chain. One of them, and this is my US mind talking too.
Okay.
It's like we've been talking about dollars.
I need to format into like miles and like
freedom units. Make the shift.
Okay.
Make the shift.
All right.
And but like the dollar debasement trade.
Right.
So they're going to be printing more money. They just came out with that. The dollar is going to lose value.
It's going to go to zero.
I wouldn't say zero.
Eventually.
We'll see. But I mean, it is like objectively going down.
Right.
And I don't know, on the year it's like down over 10% or
Right.
something like that. So the dollar is going down. We also have a U.S. president who is like,
Has a coin.
well, he's got a coin, but he also looks at the SPY like that is like how he is going to grade his presidency.
Right.
Is how that goes. So he's doing everything he can to keep that going.
Yeah.
That's his measure. So
Pretty
it's like,
bullish.
why are people not holding SPY instead of USDC? Like that to me is like, I think that's better for the holders. I think that's better all around. Like I think that why would you even hold USDC over SPY?
It's a good question. I think they are fundamentally different things. However, if you are looking for stability and you want to have a position in something, I think SPY is, on a risk reward basis, it's looking pretty good. Now, I think where the risk comes in when you're talking crypto is with the asset issuers themselves, with like how the tokens are managed on chain. Is it in some yield farm, in some pool somewhere, whatever? Is it just in your wallet and it's sitting there? Is it staked somewhere? And then maybe you have contract risk. So I think there are other risks in crypto that certainly people should be aware of. But I think, yes, the general sort of basis of SPY, being something that, is maybe a better bet for people to hold, especially in times like at the moment where number go down. And
you have this as like a hedge.
Right.
It's your crypto portfolio.
Right. It's like exit into USDC or exit into SPY. SPYR.
And another part of that too is like, okay, well, why would I hold SPY if I can get, 12% yield on my USDC in this platform? It's like, well, there's some smart contract risk. Like, do you know where you're actually putting that money?
Right.
It's like if you hold SPY, you're not like, you can still hold that. You can still self-custody that and not deal with that. So it's like, to me, it's like, it seems like an easier, I guess it's hard to get your mind around not holding dollars. I denominate everything in dollars in my head, right? But to do that, it seems like it makes a lot more sense to me.
Yeah, I think it's an interesting proposition. I think maybe it's still a very new thing, on-chain stocks, right? So I think we're going to take a few years to get there, but I see it. I think on-chain treasuries, the TVL is like measured in the billions, I think, something like that. So I think you're going to see the same thing with RWAs in terms of the stocks and so on. That's going to be a thing. That's going to be a thing for the next few years. There's going to be new ways that you can do stuff with them. Like talking with many projects here, a lot of really interesting DeFi projects wanting to engage with Remora in different ways. How can we utilize Remora tokens in different ways? I think for us, that's very exciting because if we're working with more, third parties that add some value to be doing stuff with on-chain tokens, that really is the benefit of all of the stuff we're talking about. Otherwise, might as well just go log into your bank.
Like 100%. And we're having Flash Trade on the stream. I think he's coming on tomorrow, and Austin's going to come on. And I mean, they've adopted Remora. Like pretty fully at this point, right? Like it's impressive.
It's the first place to execute a buy or a sell for stocks at the NASDAQ price, which has been a very interesting thing. And I think number one, why is that different to anywhere else? Is because usually you've been dependent on the liquidity pools, whether it's in some AMM or something, to get the pricing for the token. Whereas if you're able to actually execute trades at the NASDAQ price through, the PITH feeds, which is 24/5 on Flash, that's a fundamentally new product. So very excited to see that launch in the last week or so with Remora. So we're hyped about that. And then the token itself of that, of the pool of Flash becomes an index. So anyway, there's a lot of really cool stuff going on. But that comes back to my comment about being able to do more things on chain.
I think what really stands out for me as part of that Flash trade pool at NASDAQ prices, that enables anybody with an internet connection to be a market maker of tokenized stocks. I think that's an incredible unlock from where we were years ago, when the whole idea was you have money on chain, you can transfer it to another wallet. It was very, very bare bones. And now we're actually running kind of a full-scale market-making arbitrage pool on top of that. How does the Flash trade perps angle factor into that? What's the relationship between the NASDAQ swap pool and the perps market beyond that?
Yeah, so there's one pool on Flash of which the underlying tokens, the Remora tokens, are stored in, and then people are using that to take positions long or short. And Flash has a 10x, you can go 10x long, 10x short using those tokens, and you can redeem it in the underlying. And the cool thing about that is usually perps are, it's like a betting market of USDC, and there's no underlying. So you look at most platforms, a lot of the centralized exchanges, all those sorts of things, it's just people betting with USD. So if they have like a Bitcoin perp, there's actually no underlying Bitcoin for any of that. It's just a bucket of USDC that people are going long or short in. And that's what perpetuals have been for many years. The cool thing about Flash is you do need the underlying, so the tokens are really there. But if you're an LP to that pool, that also means that you can put your tokens into that pool and get a yield on it. And that's super exciting, because the weighting of the pool is something to talk about. Basically, like it's in the pool itself, you have a pool liquidity token, and that's kind of an index of all the tokens in that pool. So if the pool consists of SPY and NVDAR and TSLAR, you get essentially exposure to all of those through that LP token. So you're it's kind of an index of that pricing. Now, you might say, hey, look, man, I don't know if this individual stock's going to go well. Well, maybe that's the argument for having, an LP, which is an index of all of them, because then it's less risk. And especially if you're earning a yield on it, it makes way more sense to do that. So Flash is, it has a spot pool, it has perps on top of that. Each is, using the underlying, and the trades are executing at the NASDAQ price, which is a new innovation. So super exciting.
Excellent. So the end result is we have a yield-bearing index of crypto for tokenized stocks.
Absolutely. Yeah.
Okay. So the next question that comes from that is, can we expect to see the breadth of that index expand? Are we going to get Google R? Are we going to get other Remora stocks that kind of flesh that out? And
I mean, you guys tell us, what do you want to list? Like, so I think for us, it's very important to align the expectations of what Remora, can do with what people are looking for. Basically, like, is there demand for stuff? Like, there's so many listed things that you could add to Remora, but are people going to want to do it? So more things can get added, especially to the Flash pool, and more stocks there and added to that index. But it really depends on what people want to see. So could it be a Google? Could it be an Apple? Could it be a market index of Argentina stock market? Like, it could. We just need to validate that through what people are looking for. That's the most important thing for us.
And part of the Remora stack, obviously bringing off-chain assets on-chain, that doesn't necessarily need to stick exactly to stocks, does it? Is there breadth to do minerals and to do other kind of
commodities? We've had people asking about gold and silver, because obviously all-time highs there pretty much all of this year. So there's lots of different segments, right? And you could maybe make separate pools. You could engage with these things in different ways. Maybe someone builds a product where you can borrow against a full position of something. I know some people are working on that, where putting stuff into a vault, and then maybe you borrow against the vault. There's lots of different things that you can do, and especially with a lot of these different listings, it could be things which are much more. Do you remember when like FTX had like lumber? and other just weird things like that. Like maybe
whatever people wanted to bet on, they created the market for it.
Yeah, maybe people want to bet on lumber. Do you want to bet on lumber? I mean, maybe.
Yes.
Yeah, like the wheat price or something like that, right?
That would be interesting.
And those things are actually really hard to access.
Yeah.
So that comes back to why crypto is awesome, is making, tokenizing that asset now opens up that whole. Wasn't Trump saying like the cost of eggs, like they went up like 600% and then they went down 90% or something?
Yeah.
It's like, you want exposure to eggs, that's what you want. What are you going to do, go and buy some eggs and they're going to go off in like 2 weeks or something? Like
redeem them for tokens.
Yeah, redeem them, like go to the supermarket and get your money back.
This is Larry Fink's vision. This is tokenize everything.
Let's go. Yeah.
What's that tokenization process like? Like what does it take? Say you wanted to take a new stock and put it on chain. Like what is that process like?
Yeah. So number one, like I said, we have to validate that there's going to be demand for that.
Yeah.
Number two, we have to look at it from a compliance perspective. Talk with our brokers and all of that about it. Look, if it passes all of those checks, then actually the creation of an on-chain stock is easy technically, from a technical standpoint. The hard part is all of the other tick boxes and checks and balances and all of that kind of stuff beforehand. Look, I think for us, we have to go through that whole process of anything, but we do have that on the roadmap of like people want to trade more things. And at the moment we have like some of the top 5 like tech oriented stocks. But there's going to be more than that. So we're open to that. We're looking for more things. Definitely tell us in the comments, replies, messages, whatever, what people want to see. But yeah, I think things like commodities, right? And maybe interesting commodities. That could be one. Another one could be, like I said, like the Argentine stock index. Because I say that because I think that pumped like 80% when Malay won his thing like a couple of months ago or whatever. So it's things like that, right? Which are really hard to get exposure to. So maybe that's like a MSCI index of emerging market, whatever. Or it could be other things like, MSTR have these, these strike and whatever the other 3 bond offerings they have. Could be that. We're interested to hear, from people from that. And if it passes the processes, then happy to put that on chain.
I think there would be a large crypto Twitter call for Rivian stock.
Right.
It seems like everyone in crypto Twitter has this stock.
Right.
I guess they like the chart.
Okay. Interesting. Yeah.
That asked an interesting question, I think. Is crypto Twitter still the barometer of what people want in this industry, or are we over-indexing based on what we see before us every single day?
I think it's waves. What do you think, George?
Yeah, I think it's kind of, so I've had a few conversations with people recently that have come out of left field, and maybe some of them are like VCs or like a fund manager or something like that, and they're like, oh, why don't you do this? And then I'm like, yeah, but why would we do that? Like, no one is asking. I haven't seen that on Twitter. And they're like, yeah, but I know a bunch of rich people who are looking for that, and it's really hard for them to do it. So if you did it, it'd be way easier. Now, maybe that's a use case, right? And in that case, maybe we're not getting our signals from crypto Twitter anymore. But I do think that crypto Twitter is the consensus of the hive mind of crypto, and we should still pay attention to what's going on there, as much as we may or may not want to. But it's what it is. There is a lot of clowning that goes on.
Yeah, the keyboard warrior is out in force most days.
Yes.
Yeah.
Perfect.
I want to swing conversation to something that you've been very vocal about in the past. 228 failed.
Yeah.
We've got a new option. It's not market driven. It's hand wavy, compromise. What happens to Sol as an asset if issuance gets dropped? Is it the moon math that issuance goes down so number goes up? Is it that simple?
I think it is. Like the question of what is the point of inflation? It's to subsidize people decentralizing the network and running a validator. Now, then the question is, well, how many validators does a network need? Now, some might say, oh, it needs 3,000, but that's a hand wavy thing as well. Does it need 300, 3,000? Why not 30,000? Why not 3 million? Like, show me on a chart what's the better? Right? And some people go, oh, well, more is better. Yeah, maybe, but then, the whole speed of the network might suffer as well if you're having to sync blocks over a larger geographical area. So then, having less validators in some cases might be better, as long as it's still reaches the threshold of basically you can't collude, which is the whole point of having decentralization. You just don't want people to collude. So anyway, TLDR is inflation exists as a subsidy for people to secure the network and decentralize the network. And I think Solana has reached a point where we have plenty of validators, we have plenty of decentralization. Collusion is really hard to do because, you need whatever it is, percentage of the stake, to be able to do that. And you don't want centralized entities holding the most stake. But it also means that we shouldn't be overpaying for something which perhaps we shouldn't be overpaying for, especially now that a lot of validators, we run a validator, right? A lot of validators get a lot of their income from MEV and other stuff these days. So the argument of, oh, well, we need to reward validators for their hard work, it's already happening, right? Like Jito pioneered that with everything that they're doing. So validators are paid. They probably shouldn't be paid as much. I would definitely say they shouldn't be paid as much. Mm-hmm. And that's what the original sort of inflation reduction was aimed at. And now, as you say, we have this hand wavy thing to reduce a little bit, is what it is. It's like, okay, it's probably better than nothing, but it's still not optimal. Like the original incarnation of a market-based approach to reducing inflation, I think is the best. I'd love us to go back there. But then you have maybe some vested interests now from some of these listed entities. That's like, I'm selling boomers on this yield and we don't want that to drop because then the boomers are not going to buy the listed product anymore from the guy in the suit. And I would say that the network must come first, and we need to think about, what is actually the right thing to do. And overpaying validators for this work is not the right thing to do, just to satisfy some boomers for maybe a couple of dudes in suits to make some more money. I think that's the wrong way to go about it.
Something you touched on there was the decline of validators, and we're moving towards a smaller group of more concentrated, more centralized validators. Some people have argued that it's not that big of a deal. It's a question of quality over quantity.
Right.
Would you support that thesis?
I don't know. Like, it comes back to my what I was saying before about, do we need 3,000 or however many is now? It was at 3,000, I think, and now it's what, 1,200 maybe?
I think we're down to about 800 now.
Okay, 800. Yeah. So is 800 enough? Do you need a super majority of the 800? Is that still enough collusion protection? Probably is, especially geographic decentralization is another important thing. You definitely don't want all of your nodes in the same geographical area, like the same data center. That's another way to look at it, is you need like the bare metal needs to be decentralized. Data center goes down or blows up, like you don't want most of your stake going offline. So I think there is, a number which makes sense. I think 800, whatever we're at now, is fine, plenty of decentralization. Does the quote decentralization get better by going back to 3,000? I can't really see that, but all right, I can maybe see that argument. So number is down. I don't know about the quality argument. Maybe that's cope, but it is what it is. Like,
yeah. People with the larger pockets say that it is quality because it's their validator.
Right. Like, they're like, well, people are paying me money, therefore it's valuable.
Yeah.
So yeah, cool, bro. Yeah, maybe not.
Yeah, and a lot of these, these institutional folks were sold this idea that, look, total inflation is stable. It's at this percent. Here's the schedule.
Well, that's what Lily was saying originally when this thing came out, and I fundamentally disagree with that. And I think they were saying that because Solana at the time was trying to sell a lot of these listed entities on it. And I think an important thing for them was the stability of the yield for staking and blah, blah, blah. Yeah, I think you don't want to sell down the road decentralization and be rewarding unnecessarily validators for doing that work when they shouldn't. And, the cost of running a validator, a couple $1,000s a month. So you now need a stake. I think someone was saying you need 100K stake, 100K SOL in the validator
to break even.
I haven't done the math, but again, that depends on, are you 100% MEV validator? Are you not? Some, like ourselves, are, Soulflare is, a couple of others. People still stake, the APYs are still good. You can still offer people other things, like with a liquid stake token, you can borrow against it, you can do other stuff. So I don't think it's the end of the world. Yeah. People say, less APY. It's not the end of the world. It's fine.
Do you think people are just going to pass it because price down, this might make number go up?
Yeah.
But I mean, it kind of had to happen anyways, right? It kind of seemed like there was they are overpaying.
Yeah.
Right. So that change need to happen, but price goes down. We need to change it now. Like,
Yeah.
it's the mentality.
I think, and that's absolutely what I think happened in the last few months.
Yeah.
Is like, I think they realized that the people that were supporting keeping the inflation high kind of shot themselves in the foot, which, oh, by the way, that's what literally people like myself and others were saying the whole time. But now people had this amazing, realization that, oh, wait a minute, we shouldn't be overpaying.
Yeah.
Let's come up with something that maybe people would agree with. And it's a watered down version of the original one, but it's better than nothing.
Yeah.
But yeah, number down has, I think, forced that narrative.
Do you think that, like, all right, 2025, we had all the institutions come in, right? Do you think that the amount of SOL that they hold, like, could be a negative in the fact that, like, they're going to vote for their bags? They're, like, if they had a chance to vote on 441, would they vote no, just so that they can keep getting that yield, regardless if it's good for the network or not? We're like new players with different ideas, right?
It is a risk, and it is I guess it comes down to, do they care that much about the number? Right now, maybe number going down makes it harder for them to sell their product to people who want to buy it, right?
That's fair
In
point,
which case, they would want the number to go up and the APY to go down.
Yeah.
Or do they just care about the APY? Is that the main selling point for boomers? I don't know.
Yeah.
Maybe it is.
Yeah.
But I do think that, look, if number goes up, it's easier for everyone to sell their product.
Yeah. Yeah.
So I think fundamentally, even if you rely on a higher staking APY to convince people to buy your ETF or whatever, your staked ETF or your DAT, it's better if number goes up, because more people will be interested in holding that asset and more people want to engage in that market.
Yeah. Yeah.
Say that passes, yields drop. Does DeFi then become less productive because there is more of this? There is less of this cash, or there's less of this emission generation. Does LST adoption drop off to fit with that?
No, I think it increases, because the place that you get yield then becomes the DeFi platforms. So then there's that argument of, but if APY is lower, people maybe don't have LSTs. Yeah, but then what do? They probably go and look at a lender who also has APYs on just SOL or LSTs. Or maybe they use a looping product or something like that, right? So I think at the moment, with a really high APY, you disincentivize DeFi DApp usage.
Right, because people just park it and leave it alone. Yeah,
they're like, look, the risk reward ratio, because risk reward for just staking natively on the network, it's really good, because you're not exposed really to contract risk. You're not exposed to price oracles and other crazy stuff. Whereas with a DeFi lender you are, but maybe with a bit more risk, you have a bit more of a reward as well. And I think with a lower APY, people will be forced to perhaps look at that. And some people will, some people won't, obviously. But I think there's lots of really cool products out there which could really do with more SOL, more people doing stuff in those products and those contracts.
Yeah. Which kind of products are you referring to in that?
I mean, I like the looping products.
Yeah.
I think the borrowing against SOL is a pretty solid bet. That's just a basic one, right? So it's like the SOL looping is really cool, because that's kind of, you don't care about the price of SOL in that, which is the really cool thing about looping is, you have an LST and then you borrow SOL, and then that gets converted back into the LST, and then you borrow more SOL. So you don't care if SOL is $8 or $300. It works exactly the same. Now with a lower APY, that, multiply might be less productive. But it all depends on the borrow rates. So you might see more people just dumping their SOL into, say, the SOL pool on a lot of these lenders, which brings down the borrow rates, and then the APYs go back up. So it's a market-led thing.
Yeah.
You might not actually see that much change in the APYs, in my opinion. Because if an APY somewhere is high enough, people like SOL will probably find its way there.
Yeah. The market has become exceptionally efficient, and it's becoming easier than ever to find where the yield is.
Yeah, some of those pools, like in lenders, like with Camino and stuff, it was like 17% on SOL, I don't know, a month or two back. And it was like that for like 24 hours. And then you had people like arbitraging between the pools, because the other pools are like at 5% or something like that. And people are like, oh, of course, well, I'm just going to go into the marinade pool at 16. And then that brings the APYs back down, and then it helps loopers and all this kind of stuff. So that's what you see. That's the market working.
Mm. 2025 has been the year of institutions. What does 2026 look like in your eyes? What's the big narrative that explodes in 2026?
So people, I was thinking about this the other day. People saying, oh, it's like these apps that are doing like, what is it? The prediction markets and all this kind of stuff. Maybe it is. Maybe getting those prediction markets integrated into more other apps, like maybe on this stream, like we just have a prediction market but there's that you have to be very careful with, because then that opens the door for corruption.
Oh yeah.
So I've seen some of people say that with prediction markets on like news channels and stuff, right?
Yeah.
But then you have the incentive for people to just say whatever and influence. Yeah. So it is a double-edged sword, but maybe you do see prediction markets come into more other products, all around the place. Maybe more long-term things or whatever. But I think you're already seeing that. People are like, oh, look at this, sport bet on Polymarket or, Kalshi or whatever. Like, you're already seeing that. So maybe next year is the year of a lot more of that. But I think in general, it's like apps that do stuff. Because we've kind of been through every other cycle in crypto. And I think apps that do stuff, like Solana's pushing revenue a lot.
Yeah.
So I think apps that generate revenue, very important. You're going to see more of that. Maybe there's some new breakthrough app. It's probably not going to, it always is. I was going to say, it might not be like, oh, a coin, you buy a coin and number go up and everyone gets hyped and they all buy the coin. And I'm like, okay, maybe we don't see that next time. Bro, I've been around 15 years in this thing. It's always that. So it's probably always going to return, right? So
Degens are going to degen.
Yeah, they're going to do it.
My view of the prediction market is that it's kind of like a toothpaste tube. Once you squeeze it out, you can't put it back in. The technology exists, the idea is there, and now it's going to be unstoppable.
And maybe people like they tokenize their prediction market position.
Yeah.
Like if you're long Trump saying something, maybe you can use that as collateral to do something somewhere else, or figure out a way to loop it or do some crazy thing.
I love the idea of, I can borrow against the probability of Trump saying China in his next release.
People will do that.
Yeah.
They will find a way.
Yeah.
Absolutely. Yeah.
Yeah. It's, part of it feels like play stupid games, stupid prizes. Win stupid prizes. The other idea is that that's just how innovation works. Anything starts just as a game, and then it finds its maturity and becomes something a bit more tangible from there.
I think the game element, the interactive element, the sort of fun element, I think that's what a lot of the previous cycles were, whether it was NFTs or memes or anything else. People just liked being part of a crew of people that were doing fun stuff.
Yeah.
So if you can reignite the let's do fun stuff on chain, there'll be another.
Okay, what makes prediction markets become not fun? Because we saw this with NFTs, we saw with the meme coins. It started as this is fun, we're making money, and then people come and they find ways to solve the market, and it becomes hyper efficient. And the extraction schemes start beginning. What is the tipping point that makes prediction markets not fun and become a financial battleground?
I think if it gets financialized too much, like we're sitting here saying, hey, people are going to do crazy DeFi stuff, and wouldn't that be fun? I mean, until it becomes too much. And then, as you say, it's completely financialized, and there's a giga arbitrage bot that's like spiking everyone on their bets. Something like that, right? So I think it's like a little bit is fine, but too much is too much.
Yeah.
So, I think you want to have a little bit of the interesting things to do with those positions, but I mean, you can't really control that, right? Like if there's an opportunity there, someone's gonna do something that is taking advantage of that. So I don't know, but I think just getting back to the idea of apps which generate revenue is probably going to be more of that. And is that going to be like mega bullish for everyone's bags? Maybe not. But I think the days of we're just going to go and buy coins all day, well, I think we're slowly getting past that. Each cycle, we slowly get past that more and more, because there's just too many. There's just too many now. Like back in the day when there was like 100 coins, cool, all right, bet on coins. And then there was 1,000 coins, and people still did. But now there's like
1,000 coins a day.
Wasn't there like 65,000 like a minute or something minted on Pump Fun at one stage?
It was insane.
Like bruh, like too much.
But I guess that's part of it. We have complete saturation, and then the cream rises to the top, and then we're left with the base layer of what works, what makes revenue, and what is a tangible business and what can be carried forward.
There was a chart that they opened the conference with today, and it was like the fastest apps to make 100 million in revenue of like anything, like, the normie world and crypto world. And crypto apps were like the top 3.
Yeah.
So like the companies which make money the fastest was crypto. And I think maybe the rest of the world doesn't understand that, or maybe we live in our own bubble. But the apps that go big on crypto, they really go big, and they make a lot of money, right? And I think that fundamentally that is a very bullish indicator, and that's very interesting for people to see. So more of that. Awesome.
What if it's just driven totally by hyper speculation? Because we talk about these are the apps, these are the killer apps that are making $1 million a day. It's predominantly trading apps, and it's predominantly built on people taking speculative bets on vaporware. So is that something we really want to be encouraging, or do we want to have something that's a bit more tangible, a bit more grounded in reality?
I would love for things to be grounded in reality, but we are in crypto. Well, I think, coming back to the RWA thing, and what we're trying to do is maybe bring a bit more reality into this world. But you're still going to see the craziness, which I think is also the fun part, right? Like people go, crypto's too complex. And then I say, well, like 1 million people were onboarded into NFTs and they didn't understand what a crypto wallet was, and yet they worked it out and they just used it. So I think the complexity is okay. But yeah, it too much can, well, it comes in cycles, right? Too much gets overcrowded, everyone does it, and then, things dump, and that's the end of the cycle kind of thing. So yeah, maybe you see more of the same.
Excellent. George, thank you so much. It's been great chatting. It's been great picking your brain about everything that's happening on Solana. Next up, we have, I believe, Thomas Cohen from Galaxy. Galaxy has just announced a tokenization project with Superstate, so we're going to be very, very keen to pick their brain and see what all the action is on about that. George, thanks again for joining us on Solana Floor, and we'll see you when we see you.
Thanks for having me.
Thanks so much, George.
Peace.